Time for our call of the day. It's healthcare. HSBC initiating companies in that space, saying the sector's ripe for stock picking. Brian, you own several names that we need to discuss. So J&J initiated hold.
Yep.
That's on your list. Let's start there. You've got a number. J&J, Pfizer, Regeneron, Thermo Fisher, United Health, Amgen, Gilead. They also, Amgen initiated buy, Gilead initiated reduce. You want to go through some of these?
Yeah, J&J is just your steady Eddie with a big yield. Gilead has this huge balance sheet, and I think from a exposure with respect to pipeline is going to be really strong. Thermo Fisher is an amazing name in terms of the instrument side of things. Our bellwether really is United Healthcare, a good Minnesota company, but also great balance sheet and dividend growth. I think healthcare in particular, especially in the fourth quarter and into 2024, could do quite well in terms of where value is going to be more and more of a momentum factor in performance.
I'm looking at healthcare performance, which obviously is not great.
Nope.
Is that going to change? It's negative 3.6% on the year.
Yeah, I think so, because remember last year was a great performer when we were in dividend growth and value, and we probably went a little bit too far on the growth side this year, and I think you're going to see some money come back into healthcare. It's not so much I think that the hangover from COVID is hurting some of the pharma stocks, but there's other areas in healthcare that look really good, some of the names that we just talked about. When I go back and I think about Amgen, I think about the go-go 90 days when it was biotech, go, but it's a really big pharma company with a great dividend and great cash flow.
Amgen, they go 320 is the price target. What about healthcare? We're going to have a catch-up trade in that area of the market?
Yeah, I think so. I've used healthcare as my final trade a couple times on this program in the last few months. I question for Belsky, though, do you think money will come back into healthcare because things get more defensive? Because in the large cap space, right, healthcare is pretty defensive. Small cap space, it's growthy, it's biotech, it's pharma. Does it rotate back in because things got defensive, or does it rotate back in because of valuations and opportunity?
I think it's valuations and opportunity, but I also think, Liz, it's going to be more of a broadening out of the market, and healthcare will benefit from that, for sure.
Yeah.
Joey? Merck and the IBB.
Yep, 10 healthcare names in the ETF, and we've been reducing exposure for the better part of a year. We were overweight at 16% down to 6%. Align Technology, West Pharmaceuticals, Stryker, Regeneron, these are some of the names that have worked well. But I think there's been a lot of distortions over the last 24 months because of COVID that has created this environment where there was a lot of positive beneficiaries in healthcare, and that's faded away now. And I think now, in understanding the fundamentals of the sector, you're back to where you were pre-COVID. There's a little bit of difficulty within that, certainly as it relates to managed healthcare. And I do not see, respectfully, I disagree. I do not see the type of opportunities for the remainder of the year in healthcare.
Because you don't see a broadening out of the market like Brian does.
I don't. No, I think this is really, the leadership's been established. And if we're going to regain the overall positive trend for the year, I think it's going to be that very leadership that's going to take us higher, and energy will participate along the way.
Well, I think people forget that healthcare is the second biggest sector in the market in S&P, and I think a lot of investors have left there. So just think if you sell 2 or 3% of your Apple, right, and put it into healthcare, that's going to buoy the sector pretty.
Yeah, but why would you sell Apple? And why would you sell a piece of Apple and put that money in healthcare?
Well, if you're
why wouldn't I put it in other areas of the market where I think maybe would have even more upside? I don't know. That's been beaten down. I don't know.
Right. If you do, and if they're beating, well, I mean, think about places that are beaten down. It's financials and healthcare, and those are going to be the two big value sectors going forward.
Well, unless I think energy is going to have a bump. Like Joe does, perhaps?
Well, unless you want to increase your tracking error pretty substantially. Energy is 3% of the market. So you want to be increasing exposure and tracking error for 3% market, like energy, or 15% market weight, like healthcare.
No, but you could be overweight energy relative to healthcare, couldn't you?
You could.
You don't have to track the market at 3%.
You could, but then you have to kind of think, so why are energy prices spiking? And is the next call you're going to 100 or 120? If that's your call, then you should be buying energy. That's not necessarily our call.
Well, I mean, you're almost at 90. What do you think we're going to 100 or 60 next?
I think the more likelihood of lower energy prices are likely. I do, as we start to see more supply come on the market next year.